Welcome to the Jill on Money Show. It's Wednesday, May 3rd. Big day in the economy, gang. Today, the Federal Reserve is meeting, and it is expected, I'm not saying it's definite, it's expected that they're going to raise the Fed funds rate by another 0.25 percentage point. So that means we'd be at 5 to 5.25%. It is likely, potentially, could be the last rate hike of this cycle. We'll see. We'll see. But, you know, they can surprise us sometimes, but they usually telegraph what they're going to do. So if anything is weird that comes out of the meeting or the statement or anything like that, I will update you tomorrow. But have the expectation of a 0.25 point, 5 to 5.25%, one of the fastest rate hike campaigns since the early 80s. So that said, you know, I'm looking forward to seeing what happens next. It's always kind of a weird thing because people say to me, what's happening next? I say, I don't know. How do I know? But it's going to be interesting to see how the economy adjusts to these 5% rates and whether we really do slow down in the second half of this year. Could happen. So if that were to occur, then you might even have the Federal Reserve starting to cut rates sooner than people expect, and maybe not. But we'll see. Anyway, if you've got a financial question, if you want to know how rate hikes are going to be impacting you or what you should be thinking about if you are in a rate-sensitive kind of industry, then maybe give us a holler. Just go to JillOnMoney.com, click the Contact Us button. Let us know if you'd be willing to come on the air. Don't forget, on the website, we've got our new subscription service. It's called Jill on Money Live. For $35, you will have access to a year's worth of quarterly live webinars and more special content. And that content is so great. Today, we are going to listener Suzanne, who's on the line from the Midwest. Hello, Suzanne. How are you?
Hi there. I'm good. How are you?
Good. What's going on? How can we help you out?
So I have a few questions. My husband and I relocated a few years ago. At that time, he was working civil service job. So he left that job so I could pursue new opportunity. So his job change, I think, set us back a little bit in our retirement savings. So my main question now, we're back on track with a few years, maybe I call it a hiatus from maximizing retirement savings for sure. So just trying to find out the best way to really catch up, stay on track, kind of check in on where we are. I've always said I'd work till 70, but 67 is sounding a little appealing right now. So,
okay, let's do 67 seems like reasonable. Suzanne, how old are you?
I am 56.
And how old is your husband?
He is 50.
50, good, excellent. I like that. How much do you guys each earn?
So I'm at about 300 total comp. About 90 of that is bonus. It's pretty standard. He is working now more as a real estate professional, managing a short-term rental property. Mm-hmm. That brings in about 40,000.
Do you guys have any kids?
We have 4 that are all launched.
Oh my God, 4 kids all launched. Good for you. So let's do some of the numbers. Right now, Suzanne, what is the retirement contribution that you are making?
I am maximizing. So with my catch up, I am making sure I'm maximizing that the past couple of years.
Okay, so now 30 grand this year will go in. Is your husband making a contribution to a retirement account for himself?
He has not in a couple of years. After we moved, he had a part-time job that kind of ended during the pandemic. So he has not since that job. So it's been a few years.
Okay. So let's go through how much money you've squirreled away. Let's look at his old retirement first. And so he's got some money from previous world. What does his old retirement look like?
So he has a pension. Yeah. That he can begin to draw at 62, and that'll be around 35,000 a year. And he left, still has about 110,000 in a TSP, all traditional.
And no like IRA, Roth IRA for him, right?
No.
Okay, now let's do you. What is in your current 401k?
So currently I'm a little over 200,000 in a 401k. The majority is traditional.
Okay.
Recently switched to Roth, but I want to talk about that. And I put that in a target fund.
Okay. And so 200 in your traditional, mostly traditional 401k, and that's your current. What about your old retirement? Where's that?
So I have an annuity that I bought about 12 years ago.
Okay.
That's part of what I have questions around too.
Hmm.
Bought that through MetLife. It's considered an IRA, and it's a variable annuity. It's got a guaranteed minimum income benefit as
Hmm.
well.
Hmm.
So that will give me 30,000 a year for life starting at 62.
What's the value of it right now?
The value now, the balance
Yep.
been dropping, of course. It's around 170.
Because the annuity at this point, it's an IRA inside the IRA is this annuity. You bought it 12 years ago, which probably means the surrender period is up.
Yeah,
And
it
that
is.
means that you could potentially take the balance and do whatever you want with it or not. I'm just saying that that's what it would mean for right this second. So, okay, so you've got 200, then 170 in this. What about other money that you have invested?
Got about 30,000 right now in bonds, about 100,000 brokerage in a Vanguard account, like right around 100. That's
Yep.
split in index funds, stock bond funds, and about 60, another 60 that's just cash, more emergency fund.
Okay. How about your home? What's that worth?
So we bought a pretty good real estate market, and we have about a $500,000 mortgage, 2.67 interest, and we're at about 1 million in equity.
A million value or it's worth 1.5?
1.5.
Holy smokes. So, all right, now you're going to bang this out for 10 more years or 11 more years. Right now on this $300,000 income, how's the cash flow? What are you doing exactly? Tell us a little bit more about how you're managing that.
The cash flow is really good, especially the past couple of years. We have helped out with the kids a bit, trying to get them fully launched with education and some other things. So now, the past 2 years, definitely cash flow is good. Maximizing the retirement, trying to put about 2,000 a month away in the brokerage. Just trying to figure out what to do with the rest.
Do you have more than that? In other words, if you look at you're putting 30 grand into retirement, another $24,000 into the brokerage account, is there more than that, do you think?
Yeah, there's about 3 to 4,000, I think, total to invest monthly on top of the retirement.
Okay, so you're doing two, but then there's another like one or two more that you could
Yep.
potentially do.
Yep.
Okay. Is there anything else that we should know just about do you feel secure at work? Do you have a feeling of like, I could do this for 10 more years, no problem? Or is there some concern that maybe you couldn't? Are you in an industry where it's not so great to be a 60-year-old woman, for example?
I don't know if there's any industry where it's great to be a 60-year-old woman.
Amen, sister. I know that feeling. I am
But
right
no,
with you.
very secure, not worried about the job at all. We also have good Social Security. We went and did another check on where our Social Security would be at, and
Yep.
we'll be in good shape.
So what were those numbers at 67?
67, I'll be at 36, and husband will be at 25.90.
And I mean, theoretically, if we look at, the going forward at 67, just use today's dollars. Like, what do you think you actually like? What's your monthly nut? What do you really think you need to live on? And be generous. I don't want you to, kill yourself here.
Yeah, let's say 12,000.
12,000 a month. Okay. Okay. So you're going to have, 36, 25.90. Those are your Social Security. His pension of 35 grand a year, $3,000 a month, right? Maybe, we're not saying this is definite because I'm not sure about this annuity. I really need someone to look at this thing because those things are beasts, meaning that I really have to see is it really worth it to annuitize it or is it worth it to get the 170 grand out and start to be more affirmatively aggressive with it in terms of your own brokerage. I'd like a little more information on that. Based on my quick back of the envelope is you're going to have $9,200 a month coming in when you're 67 years old. So that means that we certainly need you to beef up your savings and your money in your retirement accounts. But if you're willing to work for 10 more years, I don't think that's going to be a problem. We need you to get, a bunch of money. And then I guess the other question is, if you have this house that has so much equity, is it likely you're going to keep the house, or is it more likely you're going to be like, I'm out of here? Because you said you're relocated. Maybe you don't want a Midwest winter. I don't know. But what do you think is going to happen with the house?
I think we're going to stay. I mean, we thought we'd probably want to be out of here, but we're really enjoying it. So I think we'll stay.
Okay, that's fine. That seems, I don't want you to move if you don't have to. I think you're actually in great shape. Putting the money into the Roth for you, 30 grand into Roth, fantastic. Okay. That would be a great thing for you. It's going to hurt you tax wise. Are you okay with that?
Yep. Already took that hit this year.
I know. Okay. So that's good. And then instead of putting $2,000 into your brokerage a month, put $3,000 or $3,500 and call it a day. And if you get a huge bonus, just plug that money in there. Are you working with a financial advisor?
I'm not. Just a Vanguard with
the personal
advisor.
Service person?
Yeah.
I'd love to have someone look at this annuity. I would show that annuity and say, is it worth it for me to keep this? Is it really worth it? There is every ability for you to take the balance of this account, move it into an IRA rollover, and then roll it into your retirement account and just have that's all of your money that hasn't been taxed yet. So there's a possibility you could do that. I don't want to screw this up. Annuities are so funky because generally they kind of suck in terms of fees, especially from 12 years ago. But there's a sunk cost. You already had the money invested and you actually paid the price. It may be that this could be one of those instances where you're like, well, now if I don't futz around with it, it could be good for another 10 years. I just need someone to take a look at that and to do an analysis. And if you want someone to do a deeper dive, you can always hire a fee-only planner by the hour and say, can you rip apart this annuity and tell me the best thing to do with it? And that is something I would pay money for that. I would pay an hourly rate. If someone said, it'll take me 2 hours to do the research, I would gladly pay someone $500 to do that and do that research for you and know that they're not trying to, hose you and get you to buy something else.
That makes sense.
And then you've got the brokerage account. You're building that up. I think it'd be really cool for you to, again, you're going to be putting in so much money. You're going to put 40 grand a year into your brokerage account. That's going to beef up. And then you're going to limit the amount of money that you have to take out later at that, age 75. And we probably could do some planning work. Again, who knows what the tax rates are going to be, but maybe between, age 67 and 75, we maybe do stuff. Maybe you still like working and you're like, I'm going to work for 2 more years. Or maybe you're like, yeah, you know what? I'm out of here. I'm done. But you're going to have a lot of options. So I think this is a good game plan and I feel comfortable with it. And I think it's weird. It's to some extent, you're like, oh my God, we're catching up. But you've done a very good job. And your husband's pension is kind of a real security blanket for you at a time in your life when you're going to be really psyched. I mean, there's a 6-year time difference, age difference. So that means when he's starting to take his pension is just when you need it, when you're like, okay, I'm done working.
Yeah.
So I think it works. I think it works. Now, you guys have your estate documents done for these 4 kids? Everyone okay? Okay, good. The other little rabbit that you have up your sleeve, which I think is important for you to remember, doesn't mean that you have to do anything with it. But let's just say you're age 62 and you're like, I know I said 67. I'm done. I'm done at 62.
All that equity.
All that equity, honey. You might like that house, but you might like your freedom more. And I want you to remember, I don't want you to ever feel like you don't have options because that equity essentially is unlocking potential choices for you that you're not looking at right now. It's a great house. I know you love it. You got the kids, blah, 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 all that stuff. But you may be exhausted in 5 years. You may be saying to yourself, I can't do this for another 5. So let's see how things roll. I think the game plan now works, and your get out of jail free card is all that equity. And don't be afraid to tap it if you want to tap out at work, then tap that equity and get out of that house.
Yeah, it feels good. It feels good to have that equity. And I knew better than to ask you if we should be paying down our mortgage with a rate of 2.6%.
I know. I mean, thank you for not putting me through that. I appreciate that.
We'll keep going.
All right. I think you're in good shape. Anything else for us?
No, that's it. Thank you so much.
You are fantastic. Good luck to you. Suzanne from the Midwest with a lot of equity. Wow, that's good. Hey, Mark, sometimes I know that when people get in touch with us and they're really into like, I love my house. Again, I think sometimes we need to frame this as you might love your house, but you might love your freedom more. So think about that. All right, gang. Are you thinking about your own retirement? Are you trying to catch up after doing a lot of spending on the kids? Are you willing to work a little bit longer to make the plan go smoothly? It can really be awesome. Anyway, if you want to run your scenarios by us, if you're making a big change in your life, give us a holler. Go to JillOnMoney.com, click the Contact Us button. Let us know if you'd be willing to come on the air live. While you're on the website, don't forget the new service, Jill on Money Live, the book, Great Money Reset, free weekly newsletter, resources, all that great stuff, all there for you. Okie dokie. I think it's time for you to put your hands metaphorically on someone's back. Change your work, change your wealth, change your life. Thank you for listening. We'll talk to you tomorrow.